Well, as promised, I'm now building a sort of a compilation video of what I've gone through over the last few weeks to give you an idea about building a portfolio, buying and selling stocks, all the things that go around it, how you filter things like that. So there are many aspects that go into building a portfolio, but I'm going to cover some of them for you today so you can get a good idea of what you do and what I do and what my business is. Okay, so here I'm going to talk about building a Firestock portfolio. I think I've shown you the last few weeks that the conviction portfolio, the smaller portfolios are the best performance. You can do 10, you can do 12, you can do 20 if you like, but you're going to find they won't perform as well if you're using Stockradar rules. Okay, so let's talk about building and managing a portfolio and based on a Firestock portfolio. Okay, so we don't just buy stocks and hope. Okay, there are a lot of things that go into making money, and I think a lot of people have told you money management is one of the most important things in helping your portfolio perform. There are also other controls you must have around the portfolio that takes a lot of the decisions out of the market, the human interaction decisions, the decisions on the fly, all those sort of things that are very dangerous and not really good for a stock portfolio. So we don't just buy stocks. There follows a process of managing and monitoring guided by your trade plan. So you have built your trade plan that you will follow. You do it for a reason to follow it. Okay? So it's a process that we do. So where do we start? Okay. So we start with processes and rules. We've got to work out why we're going to buy stocks and why we're going to sell stocks. So if I know why I'm going to buy, I have my rules, I'm going to know what I'm going to buy. Okay, and what I do at Stockradar is I use my trend intensity rating system to qualify stocks using my criteria, and that's why I buy stocks. So if you want to know more about the trend intensity rating system, you can go to the About section of Stockradar. You can look at our Stockradar trading strategy. You can also look at the trend intensity indicator. You can also go to my YouTube channel, Richard Lee at Stockradar, and see my trend intensity indicator. The video I've got there is probably about 4 years old, but there's no reason to change it because it's still valid as it was then as it is now. Okay, so that's the process and rules for the entry. I use my trend intensity rating system. So I also then need to know when to exit. So what I do, we know why we sell, so then we know what to sell. It just makes life so much easier to do this sort of thing. So I use a trailing stop. Why do I use a trailing stop? 2 reasons. One, it cuts my losses. I don't take big losses. I don't care what it is. Once I get down to about 15%, I get out of the market if it goes 15% against me. So I never take big losses. It also, a trailing stop also makes me lock in profits. So once we've got a big profit in there, we've got to know when to sell. If we don't know when to sell, we're probably going to watch it slide down the scale because we as humans are always hopeful that the market's going to change. We're also optimists that things are going to go up again, and they invariably don't. Once your stop loss goes off, invariably that's probably the end of it. So I use a trailing stop to help me sell, and again you can see on my YouTube channel I have a small video, trade process, stop loss, stop profit, that gives you an idea of what I do and how I do it. So the exit is predetermined before I even get there. I know exactly what I'm going to do, so I always say at the end of my videos, I know exactly what I'm going to do before it happens. I can't control the market, but I can control what I do. Okay, so there are a lot of other things that go into making your portfolio work and controlling things that you don't want to do. So firstly is, what portfolio size will you use? You can do a 5, you can do a 10. A 10 is fine because it still generates good return. You may want a bit more diversity, you may feel more comfortable that way, that's fine. I focus on high conviction. The results are on the homepage of Stockradar, again because it's low activity, which means it's lower cost, and it's also better performance. And cost these days, from the old days of paying hundreds of dollars for brokerage, is now down to about $9.50 a trade, no matter what size you trade in certain places. So online has been a boon for everybody as far as stock trading goes. So that's why the portfolio size and costs, what I do there. Okay, now I'm going to show you the portfolio a bit later on, but this is what I'm going to start doing. And I started building this one, and I'll explain to you a few weeks in my weekly video what I did. So I built a portfolio based on the top 100, which is reviewed every 6 months, so I know that I've got the right stocks in there. Anything that's been delisted or taken over is taken out. I use Stockradar's control criteria such as many things that I use, and amongst them is portfolio sectors and market capitalisation filters, and there are lots of other ones that I use to control that. What I did was I did a capital allocation of $5,000, $1,000 each stock, I started on the 15th of March 2021 and added 5 stocks as per Stockradar's trend intensity qualifications. So on a weekly basis, I've been reviewing this for you so you can have a look at how it works out. So that's what we'll do. I'll have a quick look later on in this video as well. Okay, so this graph here explains to you why I do Firestock portfolio. So this is about 18 years of testing, and you can see the Firestock portfolio performs far better than the 6, the 7, the 8, the 9, the 10. This is, when I get it right, I get it right. Okay, that's really what I'm talking about. So when you get onto a stock, be it a Boral, be it a Fletcher Building, be it an Oz Minerals, whatever it might be, when you get onto those stocks, you've got to run those stocks. And if you have 20% of your capital in those stocks, then you're going to make some good money. So the risk factor is about 3% on a Firestock portfolio using my stock rules. On a 10 stock portfolio, it's about 2%. So it's slightly higher risk, slightly higher volatile, but not that great in the scheme of things. But this graph shows you clearly why I go to high conviction and the returns are based on the top 100 stocks. Okay, and again, this graph as well shows you the equity curve of all the portfolios from 5 down to 30. And you can see, the reason I show you these charts is so it's not a random thing that's occurring here. This is a very, very controlled environment of what I'm doing. Not just the buying and selling stocks, but all the things I'm doing about what sectors, what market cap, what filters I'm using to control it. So that's why the portfolios all perform the same. Excuse me. But the 5 stock and 6, 7, 8, 9 all perform better because the stock picks work, the trends work, and we know how trends develop. So this just shows you that it's not a random thing, that there's no irregularities, there's a clear pattern because I behave the same way all the time when I'm selecting stocks and when I'm exiting stocks. Okay, so that's why you've got this very clear pattern of a graph here. So that's the results. So setting the actual data universe itself, there's quite a lot involved with that, and you can do a lot of different things with the data universe, but set it and then have it. So what you can do is number of stocks in the data universe, how many you're going to have. I use a top 100, and I've only got a 5 stock portfolio, so there's always pretty full because there's always usually stocks going up or breaking up. So it doesn't really matter, you can use a smaller data universe, you can use a different data universe to what I use. It's just a matter of controlling it so you know exactly what you're doing. So I use the sectors covered, there's limits per sector, so I can't be too overweight a sector. For example, there's market capitalisation limits. I do the top 100, you may want to do the 100 to 200, you may want to do the 50 to 150, whatever it is you want to do. There are price limits. What size stock do you like trading? $20 stocks or $5 stocks? There's also fundamental screens. I don't use them, but you may wish to do that. So there's lots of different ways you can filter your data universe, your group of stocks. So you really should, to be consistent and reliable and make your returns consistent and steady, you need to have this controlled environment, and the first step is setting your data universe. Okay? Then you've got your portfolio itself. You've also got to control all the things regarding the portfolio. So the filtering options are, again, sector limits. I'm only going to have a certain amount of stocks in one sector. I don't want to be overweight a sector. You might exclude certain sectors. You might not like property, or you might find gold too volatile. Exclude them out if you want to do that, and that's fine. Again, market capitalisation is another way you can do it, or you can use trend intensity as a way of filtering out stocks. Okay, so there are different ways you can do it, and you can think you may have your own idea, but there are also other ways of doing it. It's not a finite thing, but you need to make that control on your universe and the portfolio you're holding. Okay, so filtering the data universe, this is just an example of one filter that you may want to use, okay? So filtering by price. There are many ways. What is important to you as a filter? So with price, price is a very simple filter. Some don't like trading higher price stocks. You know, Rio's over 100, oh no, it's not over 100, but a lot of these stocks are CSL's $220, whatever it is. All these stocks that are very high price, some people don't like to trade those higher stocks. So you can limit it by price, and that still maintains the market neutral agnostic methodology that I have. I don't favour sectors, I don't favour anything. I look at everything through a neutral window, which I must do. Okay, so how many stocks do you want in your universe? If we're going to do it by price, for example, in the top 100 there are 55 stocks priced under $15. There are 36 stocks priced under $10. There are 20 stocks priced under $5. Or you might want to change your universe from your top 100 to the next 100, 100 to 200. There's many different ways you can do it. So this is just an example of how you can filter. So you might want to use a top 100 and you may only want to trade 36 stocks. 36 stocks in your holdings, they're all under $10. So they're all under $10 stocks that you can trade. So they're all, any of those stocks that come in or out, you will trade, buy or sell, whatever you're going to do. So that's just an example of a filter that you can use. And there are many of them. So building and managing folder, combine with other filters. So you just have one filter, you often combine them, okay? So sector limits exposure, sector limits ensures an equal exposure posture. Again, and we're not favouring any stocks. We would love to favour banks, we would love to favour miners now, but we didn't know that was going to happen. But as long as we've got a couple of good stocks in there, that's the important thing. How many stocks will you hold in your portfolio? Fix the number to reflect your capital base. I.e., if you've got $100,000 and you want to trade 10 stocks, then each stock should be allocated about $10,000 each, and that keeps an equal weighting. That's if you want to equal weight, but that's what I do. So 5-stock portfolio will be on $100,000 will be $20,000 a stock. Okay, so that's how you control your exposure. Okay. So I talked about the portfolio before, about what we started on 15th of March, and if we go back to our premise back here, the top 100 universe, criteria, portfolios, market capitalisation, capital allocation $5,000, started on 15th of March, and I've executed each as it has happened. And so what we've got now is we've got the portfolio that started on the 15th of March 2021. Okay, now these are the stocks that are in here: Independence, Mineral Resources, Adelaide Brighton, Computershare, and Washington Soul Patterson. Okay, last week we lost JB Hi-Fi and we added Independence Gold. Okay, I don't think there's been anything this week. This would have been from the end of the week on about the 9th of May. Okay, so you can see here the results here. Now already we've got one stock which is standing out. This may be one of the stocks that's going to be our one of our trending stocks, which we're going to hold for a while as that trend develops. These other ones here, we've got 1% in Independence Gold. It's only been in for a week, so I'm not too concerned about that. We've got 3 other stocks here. The market's been a bit flat the last couple of weeks, a bit jumpy, but those 3 other stocks here are down, all down a little bit, and they may get stopped out. They may develop further. I don't really know, but I will let the rules tell me. But already, I'm looking at this one stock here that's already won, and I might hold that, and I might be able to add another one, which might be Adelaide Brighton, which may become a trending stock. I don't know. So the challenge is to apply your trading plan rules and commit to the entries and exits, and not try and make human decisions about what you are going to do and not going to do. Okay, so if I now go on to what my 5-stock portfolio looks like at the moment, this is a week or so ago, where we want to get to. This is where we're going to get to. We've just started that one, but this is where we want to get to. I've been running this for 18 years, and so this is where it's at now, and I'm going to show you the profile. So we've got a Luca, Boral, Independence Group, which has just been added, James Hardie, and Bendigo Bank. So in this situation here, last week we lost IEL, and we added IGO. Now, if we look at these numbers on the right here, 1, 2, 3, 4, 5, we see what I've got here is number 1 is the longest stock I've held, which is a Luca. I've held that since August last year and it's generating 72%. The second stock is 21st of September last year, generating 52%. The third stock is James Hardie, 15th of October last year, generating 25%. The fourth stock is Bendigo Bank, a reasonably recent entry, 22nd of February, it's only up 2%, and then IGO is the 5th stock, up 1%. But it's the profile I want to show you here. The longest dated stocks will invariably be the best returners. So as we weed out the weak and hold the strong, this is the profile that you will develop. And again, depending on the market state, sometimes it's not very conducive to getting stocks running. Sometimes it is, but you just got to take that. You got to take that medicine and just keep working on these portfolios, and they will work out because this is what the research shows us. So that's how it works out. So that's where we want to get to in the end. Okay, so building and managing a portfolio, we need to filter the data universe. We also need to filter our portfolio holdings and select the size of our portfolio. And this can all be done in many, many ways. Once you've tested and you're happy with your filters, give them time to work before tweaking. Okay? You've got to let things go and not be too reactive to the market. I really don't care what the market does. I just want to know what my signals are, and I just do it. It's almost boring. It's almost robotic at some stage. So that's how it works. Okay, so firstly is don't panic. That's the worst thing you can ever do, because then you start making crazy decisions. Always behave the same way, be it a bull market or a bear market. It doesn't matter. We actually don't know whether we're in a bull market or a bear market sometimes. We do know if the market's gone down a long way, but we don't know. Like now, are we at the top of the market when the ASX 200 is right up its highs? Are we going to come down from there? I don't really know. So we've got to behave the same way. This is a weekly time frame, looking for weekly trends to emerge. So be patient and ignore the daily reactions. I very rarely look at the prices during the day, because that really doesn't tell me much at all, and it doesn't affect my decision making. I wait till the end of the week, and if Friday's price is above or below a resistance point, or above or below a trigger point, or above or below a stop point, I will then execute those trades on the Monday. Follow your plans and money management rules. They are there to keep you safe. Okay? All right. So that's cool heads make cool decisions. It's what I'm always on about all the time. It's sometimes hard, but you need to try and fight that urge. Okay, so identifying trending stocks is just the beginning. Okay, then you've got to, a cognizant portfolio approach then controls the many aspects that enables a group of stocks or price actions to be combined to generate a positive outcome. Okay. Don't expect every trade to be a winner. We know that. They're going to take some losses. Make sure you take them when you're told. Don't let it get big, because I can tell you right now, some of the biggest problems with portfolios, with people with portfolios, is they've got one big stock that they fell in love with and collapsed. And it might be a CSL, which came well off its high, but people still hold it. So if you're a long-term holder, that's fine. But if you're a trader, it's not so good. You've got to get out of it and take profits. So make sure you haven't got one of those big bits of baggage on your portfolio. Make sure you cut them out when you're told to. Okay, so you can't control the market, but you can control what you do. Okay, so take control is the main idea. Okay, so that's really a bit about building a portfolio. I'll go over little bits and pieces in my weekly video, but I just thought that was a bit of a good précis talking about the analysis side of it, which really in the end is probably about 10% of what I do. The rest is managing the portfolio, controls, money management, all this sort of stuff, monitoring, and all that sort of stuff that goes into making it work. So if you've got any further questions about the portfolio and how to start it and how to run it, you can contact me, Richard Lee, at richard@stockradar.com.au. There is a premium portfolio service, further information on my YouTube channel, Richard Lee Stockradar, premium portfolio service. Fairly in-depth look at the research that I've done that generates what I've got. Some of the when I talk about some stop losses, I talk about different areas, the whys and the why nots of the portfolio. So it gives you a bit of confidence of what I've done. And also on the Stockradar homepage, you can read about the premium portfolio service there. So you can watch or read, whichever you like. Okay, so that's about all I've got today. I hope you find that useful. As I say, if you've got any questions, please feel free to give me a call or send me an email. Okay? Thanks very much for listening, and I'll see you again soon. Bye now.